Right, hello everyone. Welcome back to Crypto Explorer's stream. This one is for top tier members, mid tier members, and then all the free members as well. So we do these probably once a month. The way I'll break this down is we'll go through some of the macro. It's done by importance. So I think we start with macro, we then look on chain, and then we look at charts. But yeah, let's get straight into it. So for the macro, there's so much contrasting data. It's really difficult to really break it down and formulate an opinion and stick with that and with that opinion, because the Fed has come out and said, or Powell has come out and said, that we're going to be data dependent going forward, and that he shook off the forward guidance. He didn't want to keep giving forward guidance. They've got it wrong quite a few times, and the market has, I believe, has taken this the wrong way. They've taken this as Powell's opportunity to do a soft pivot, if you like, and to give some relief to asset prices, but it's just looking too early. It's looking too much of a risk. I feel like the market has got this wrong, because I don't think Powell would have intentionally meant to do this. And the one comment that led to the markets going up significantly was, sorry, you have to bear with me. I still have this cough, unfortunately. But back to the stream. So the one comment that forced the markets up is when Powell spoke, and this was unscripted, so it was against what he was probably supposed to say. They asked him about where they think inflation will be in 6 months' time, and he usually goes with, we want to see the course through. We want to get ourselves well above neutral and make sure that there's compelling evidence that inflation is coming down. Blah 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 blah. He's been saying this for months, and now all of a sudden, this time he didn't go along with that narrative. He basically sat there and said, "Look, it's really difficult to know where rates will be in 6 months' time." Apologies. Where rates will be in 6 months' time. With that being the case, he's moved away from that inflation narrative, and the market has taken that really positively, as if Powell is saying, look, there's a chance we may cut rates going forward, come maybe Q1, Q2 2023. So that's why the markets took that one so positively. And another comment that was also said was that Powell said that he believed interest rates were now broadly in line with the neutral rate. That neutral rate effectively means that rates are not hindering growth, but they're not also encouraging a contraction in the economy. Literally, as it says, it's a neutral rate. So that was very unscripted, and the market rallied on both of those pieces of news or statements, if you like. So that's where I think Powell made a sort of mistake. And some people are calling this a soft pivot by Powell, but Powell previously, when he's pivoted, has not done soft pivots. He's been very abrupt and really made it blatantly obvious that the Fed is pivoting, i.e. inflation is no longer transitory, is probably the best example I could come up with. But yeah, that's basically what we're seeing now. So we're still seeing inflation is obviously really high. Let's scroll through, because we have that on the 10th. So I usually tag this in the Discord. This is where you come to see. Apologies, this cough is killing me. Yes, this link is where I go all the time to see what data is coming out and what I think is going to affect the markets. The ones highlighted in red are usually the most important, and the ones that people are watching, most intensely. But we have the inflation comes out on August 10th. So not this Wednesday coming, the following Wednesday. We can see here that we've got a forecast of 9.2, consensus of 8.9. So that's come down, a little bit, but we're seeing here the same sort of thing. Now, it really depends if this comes in higher or if this comes in lower. If this comes in lower, that may suggest to the Fed that, haha, you're doing your job, well done, you've raised rates, now they're destroying demand to some degree, and we're starting to see inflation come down. Excellent, you're doing your job. However, if this comes in still higher, that means that there's elements that make, the strongest elements that make up the inflation i.e. things like rents, wages, commodity prices. Yes, commodity prices have come down in the last month or two, and inflation is a lagging indicator. So we might see some downside because commodity prices have come down. However, rents and wages are going up at, an extremely fast rate. So this, parts of it are okay, but parts of it also don't really bode well. So, we've been on the inflation narrative for so long, and then the last month or so, there's been this focus on economic growth, and the data's come in. The economic growth is really slowing, and you've just had the second quarter of negative economic growth, and that would technically mean a recession. But Powell literally said in the press conference, we don't know, we don't want to cover the active definition of recession ourselves, but that the job market is really strong. He basically did everything he can to move away from the topic of a recession, of the US currently being in a recession. And that's more than likely due to the fact that he's getting a really polite political touch on the shoulder to say, hang on, sir, make sure the market doesn't think we're going into a recession. As long as the job market is strong, we're all okay. And that's basically the narrative he went with. And he moved away from the we'll do whatever it takes to deal with inflation narrative to a slight focus on just moving away from that narrative, not even concentrating on anything else in particular, but just the movement away from that narrative and the I suppose an ish focus on economic growth, but still saying, he said in the scripted part, inflation is our number one priority. We're doing whatever we can to bring inflation down, blah, 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 blah. And then in the unscripted part, he spoke a lot about the economic data and the jobs data. So, I think he played it reasonably well. I do think the market have read it wrong, though. So, and I think the neutral rate comment was really stupid. Not really stupid, he's probably far more intelligent than I am. But, and he's got a lot of economists and advisors around him that would be telling him all this data. However, we don't really know where neutral is, and particularly in an environment where 9.1 is the inflation rate, how on earth can neutral be at 2.5? 2.25 to 2.5. It's just not going to be there. It's probably going to be at least 50 basis points higher. So it's probably going to be at least at 3%. If it's at 3%, they need to go into restrictive territory to pull inflation down. So they're going to have to go to 3.5 at a bare minimum, more than likely. So again, it depends on how this data comes in. If the job data comes in strong and inflation comes in high, they have to then do more. So what that does is then that leaves them to be, we've moved away from the inflation narrative. If jobs data comes in strong and inflation comes in high on August 10th and I think it's September 13th, and then the next Fed meeting is on September 21. So the two bits of data, inflation data, August the 10th and then September the 13th. If those come in hot and the jobs numbers are still low, are still showing that there's some relative strength. If you look in the underlying, there actually isn't, a lot of people have left the workforce, average hours are down, the median hours worked are down, but the unemployment rate is still at 3.6%, and that's sort of what people focus on, and jobless claims have only started to rise now. So there is some underlying weakness, but overall the headline figures are still strong. But if we get to those two big inflation prints, if we get them August 10th and September 13th, I think September 21st, the Fed might have to almost re-pivot their soft pivot back into inflation is our number one priority, blah, 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 blah. And if they do that, the markets, how do you take that at that point? It's likely that the market would have already priced that in. But if he goes back to doing an aggressive narrative on inflation, the markets will sell off if they haven't sold off already. So alongside this, we have companies reporting decent earnings. They've been guided down, and most of them have just beat those earnings. However, inventories are at record levels. You have people like Zuckerberg coming out and telling Meta employees that, productivity has to increase. We need to be working extra hard now. They're expecting 1 or 2 really difficult quarters and for earnings and revenues to likely come down. If that's the case and revenues come down and people have to get laid off, spending in the economy comes down. Now, spending came out last week. Let's get it up. Next week, what am I looking at? Tomorrow, this week, previous week. Sorry, that was a bit backwards of me there. It's not there. It's not there. Do. Where are I? Okay, here we go. So personal spending month on month came in strong, 1.1% when consensus and forecast was 0.6 to 0.9, and the previous was 0.3. So it beaten the previous quite well, and it looked like there was a downtrend, and it spiked back up. So spending is still strong in the economy. However, debt is rising. So this means people are only saving a small amount now, and they're borrowing to continue their spending habits. So there's only so long this can go, because they've lived through COVID where they had more money and goods were still to a decent value. Where now those goods are much more expensive, they're having to borrow a small amount on credit cards and things like this to keep up with those things they've now got used to living with. So spending is still good, but debt is rising. So there's only so long this can go on for. So as Zuckerberg is telling his employees need to be more productive and really push out, and if you start seeing that earnings come down, which they probably will, because revenues will come down, those the not the weakest employees, I don't know the best way to say it, but perhaps the least productive employees will possibly get let go. If they get let go, then spending in the economy comes down, revenues of companies comes down, earnings comes down, and what do companies have to do then? They have to find a way to boost their earnings again. So they cut more staff. It's just an endless cycle until we get to an actual bottom. But I still think we have all of that ahead of us. So this has sort of been a macro piece so far. But if we now look at crypto's highly correlated to risk assets, so to risky equities. So if that's the case, and we expect big tech to come in, i.e. we've seen the last 6 months valuations have come down. We're now going to likely see earnings come down. And what makes up a stock price? Earnings times multiples. So yeah, I think it's all got to come. I'm not banking on the fact that we've already hit a bottom. To be honest, I don't know. I think it's very possible we retest the lows at least. But look, we're gonna have to play it by ear. We're gonna have to see what data comes out, and we're gonna have to be really versatile and maneuverable here to the changing data, and just make sure we're staying on top of it on a daily basis. But that's the macro. If anyone has any questions on that, please feel free to fire over to me in the chats. It took me a long time last week to digest the Wednesday meeting, so I couldn't make sense of why the market was rallying on such, it wasn't even a soft pivot. But anyway, we'll move on from it. Let's look now at the on-chain. So, first thing we'll look at is addresses for Bitcoin. So the smallest wallets are increasing. So all number of addresses with balance greater than 0.01 Bitcoin. Let's zoom in a tad. So they're still increasing. Go away. We need to come off this. Perfect. So these are still increasing. The number of addresses with greater than 0.01 Bitcoin is still increasing. Addresses with balance greater than 0.1 still increasing. Addresses with balance greater than 1 still increasing, and really aggressively. Now, as we start getting into the deeper wallets, we know this is the wallet we watch out for. These are the best, not these ones, even though they're the biggest, they're not actually the best traders. These ones are in terms of historically risking on and risking off, these guys here are the best. So we watch them. So we can see here, they've actually de-risked again. We know this wasn't a misprint, but it wasn't organic. Glassnode, the data company or provider, confirmed that. So we know this isn't organic, so don't worry about this. Really, this line where my cursor is that started here is actually really starting down here, again where my cursor is. So you probably risked off a lot more. And again, in this move up here, they're not buying this move. They're risking off into these higher prices. So for me, that tells us all we need to know. If we look at the 100, we'll just go through some of the other cohorts. They haven't really risked on or risked off. They've not really done anything. But what they have done is they've sold down here. This wasn't organic, was a misprint. Then they've been almost range bound up here, but obviously it probably operates where my cursor is down here, and then they've sold off again. So these guys have been pretty good as well, to be honest. Addresses greater than 10, they've done pretty well. They've risked on all through this. So this last part they've done well, but this part they didn't do too well. So they're right just as much as they're wrong, basically. So that's why we don't really watch them. But that's where we're at. The small wallets, the small fish are still adding. The big boys have not yet risked back on. In fact, they are still offloading some of their risk, some of their coins. So that's really something to pay close attention to, and something that we think We have to emulate that. We can't sit there and say, oh no, I think that they're wrong. Blah. No. At the end of the day, they're the best wallet cohort to watch. So we have to emulate them and take a significant weighting in terms of valuing what they're doing, and we have to go with that. Let's now look at a couple others. Let's look at the key ones. So we have MVRVZ score. It's in the green zone. That's nice to see. So this very much could be bottoming, but we could dip back in. Sorry, let me take a drink. So we could easily dip back in, but historically this has been a good price. I think if we revisit 20k Bitcoin or a 19k Bitcoin, I think it's probably a mistake from myself that the last time we visited 17, 18, 19k, I didn't risk on at all. I should have risked on maybe 10, 15, 20% of my total capital, just because we'd sold off so dramatically. But yeah, it was definitely a mistake. If we go back there, I'll risk on a bit more and we'll start building a position. But yeah, that's one metric. Let's now look at, but who knows, it can definitely still go lower. I'm not saying it can't go lower than 20k, 19k dollars. It could easily go down to 14, 15. I think if it goes down to 14k, you throw the absolute kitchen sink at it. And you would risk on a significant portion of your portfolio and almost come out of the market. And you want to almost forget about crypto for a year and a half or something like this, and you'll do extremely well. And then you just wait for it to come up, have a euphoric rise. As soon as your friend who's not into crypto asks you down the pub that he's considering buying some crypto, that's usually when you would sell your crypto. But anyway, let's look at net realized profit to loss. So this is a great metric for me personally. We have to zoom in to make it a bit more accurate. So what this shows us is the net realized profit or loss. Realized is the key word. Net realized profit loss is the net profit or loss of all moved coins, i.e. coins that have been spent, realized. So if I bought Bitcoin at $30,000 and I just sold it at $22,000 and I had one Bitcoin, I've taken $8,000 loss and I've crystallized that loss. If we'll look at another one in a second, which is, where are you? Net unrealized profit and loss. Unrealized is the fact, same example, I bought it at $30,000, one Bitcoin is now at 22, I know it's not, it's at 20, oh it is, 22,900 now. But let's just say it's at $22,000. I, in theory, am down $8,000 on my investment, but I haven't crystallized that loss yet. That's unrealized profit and loss. This is where those profits or losses have been crystallized. So what we can see is during the bull market, it's always green. Mostly green because people are booking profits. And then when prices come down a lot, you see a lot of selling off. As you see this selling off, you get these realized losses. And you return to this kind of state we saw in here. Is similar to what we're getting now. Perhaps now what we're getting is even worse. Because you're seeing this black line effectively acts, this horizontal black line acts as a break-even point. So it's the realized, people are buying in and they're now in unrealized losses. When price comes back up towards their entry level price, i.e. their break-even level, they're not having much conviction and saying, you know what, I think price is going to go higher. I'm not going to sell here at break-even. I'm going to wait and let prices go higher. They're not doing that. What they're doing is they're saying, well, as soon as price gets anywhere near where my entry level was, the break-even level, I'm selling, I'm out, I'm done. If it's 0%, 1%, 5%, 6% loss, I'll take it. I just want to be out of the market, which is why we keep seeing these red spikes down. And as we move up to the black line, we barely get any profit taken. It's a resistance line almost. So that's really something key, and we're still seeing that now. Once you start seeing this turn around, that might mean more strong conviction and momentum is coming back into the market. Let's look at unrealized profit and loss. We'll zoom back out for this. Sorry, I know I talk fast sometimes. I know some of you guys are not happy with me about this, and I'm sorry. I get very into it. Apologies. Net unrealized profit and loss. As usual, guys, if there's any questions throughout this, you can message me in the chats, even on this YouTube chat or in the Discord. And if it's in the Discord, I won't see it, but I'll get back to you, later on this evening, and I'll answer whatever questions you guys have. Apologies, have another drink. So, if we look at the net unrealized profit and loss, we can see that prior times, you want to be buying in the red, but here, this is a good rally. This may mean that the bottom is in, but I think with the macro that we have ahead of us, I would say the chances of the bottom being in are much less likely than the bottom not being in. Simply because we have earnings to come out. Inflation has still not been dealt with. We believe the market has read the Powell's soft pivot, or whatever it is, in quotation marks, where they've read that wrong. If inflation stays hot, then he'll have to realign them back. It could be chaos ahead of us still. So we'll have to see. But this metric suggests that we were silly. It's 100% my fault. We were silly to not have risk back on down here at the 19k levels. We should have put at least 10-15% to work, and then we could make a decision on what to do with that now. But either way, it's about building position over a month or so, even longer sometimes. And we didn't do that, so that's definitely my fault. But again, we'll be on this now. Not that we weren't before, but we just should. I just regret that decision. I'm probably being a little bit harsh on myself, but yeah, I would like to risk on a little bit, even just with a small percent of the total portfolio. Let's move away from that. Miners, perfect. So, what happens in late stage bear markets? Well, minor capitulation is a good signal of late stage bear markets. What that means is this. It means that as Bitcoin price is high, anyone and their mother can mine Bitcoins. If they buy the right equipment, they can buy Bitcoins, and as long as their electricity bill isn't ridiculous, they'll likely be making a profit, because the Bitcoin price in USD that they're rewarded with will be greater than their costs. When Bitcoin price comes down, these inefficient miners are flooded out of the market because they turn off their mining rigs, because as price comes down, the reward in Bitcoin they're being paid, that USD value that they then sell that Bitcoin for, so the dollars they get back in return, does not cover their costs. So it's no point in them even switching the machines on. So they turn their rigs off. As they turn their rigs off, difficulty level comes down. So let me zoom out. You can see here, this is a perfect example, 2018. As difficulty comes down, hash rate also comes down. We'll click on this in a bit. So as these things come down, the inefficient miners are swept out of the market, and the efficient miners are the ones remaining, and their Bitcoin reward per block is increased. So for being efficient, they're paid more Bitcoin because now there's only X amount. There's less miners than there were beforehand, so they get greater percents of the rewards, or proportions of the rewards. And then what happens then is Bitcoin price starts coming up as difficulty and hash rate increases, because the inefficient miners have been flushed out of the market. So this is a great example here, which is what we're currently seeing here. This is an anomaly. This is an anomaly simply because this was the great miner migration. This is when China banned Bitcoin, blah, blah, blah. Everybody had to move. So everyone switched off their miners and it was just chaos. And this was probably why we also had this big significant move up. But we have this difficulty trending down. And we have, I need to do the average, apologies. And we have hash rate coming down now. It's a bit more volatile. If you look back in 2018, end of 2018, it's very similar to what it looks like now. Just now is like the same version, but just much more volatility there. Again, this is an anomaly because of the minor migration, so don't consider that. But this is showing us here lower lows, lower highs, coming down. We need to see a bottom in this metric, and the most ideal metric for this is the hash ribbon. So the hash ribbon, if we look to 2018, is when the 30-day crosses back above the 60-day moving average. So that's when we peak out, we come down, we form a bottom, and then green crosses above blue. At this moment in time, we're peaking out, we're beginning to come down, we need to find a bottom, and then green needs to go above blue. So it's very possible we have, what's that, November the 6th? We could easily have another month of this left. So, if Bitcoin price comes down again, you'll see this probably really turn down. That would be most ideal. We can risk back on. This will come down significantly, i.e. 30-day moving average will come down a lot more. We'll likely find some kind of bottom, and then we'll begin turning around. Very similar to what we saw back here. So this is a real key metric I'm watching, and this usually indicates a late stage bear market. So it's really important to watch out for this. Okay, So that's it for macro. That's it for on chain. All goes to the charts. Okay. We'll start with SPX. SPX, another decent day. Go away. Oh no, we'll clear it for now because I just don't like looking at it. Okay, so far it's a decent move. It's a good move. I think it's becoming slightly extended, although we don't really look at the SPX too much. We mostly look at the Nasdaq, but the Nasdaq has done pretty well. But today it's finding, let's go to daily. Sorry, it's finding a little bit of resistance here. We'll see how it goes, but feeling is this will start to come down, especially as we go into liquidity areas of this bottom, and we're at this top now. So we'll see how that goes. But these bottoms in here, and in here will probably provide, as you know, we've wicked in and we've come back down. So, let's see how it goes. But we know with Bitcoin it's highly correlated to the Nasdaq. So, I think Nasdaq could be topping here, locally topping. If it's locally topping, it will come down, and Bitcoin will likely do the same. And Bitcoin has to some degree already. We know for some reason whale map I can't get whale map up today, but with whale map we know the realized price for the addresses is between it's 23,455 to 24,855. So there's about $1,500 difference between 23,400 and 24,800. We can see here on Bitcoin, that's like a resistance, similar to the break-even lines. I'm telling you, that's their realized price. So people, when Bitcoin price goes to that region, people are getting more towards break-even, having been in an unrealized loss, and then they just get out because they say, you know what, I'm out of the market. I was in a decent loss, a big loss. I'm now back to break-even levels. I'm going to sell my coins and be out and be thankful I've only lost a very small amount or broken even basically. And as I told you, those prices 23,455 to 24,855. Our top was 24,779. So this is something we called a week or two ago, saying that might be strong resistance. We're starting to see here, let's go to, we are on the daily. On the daily, we have a higher high. I have to really zoom in, but it is a bear div. And we have a lower high on the oscillator. That's a bear div. We're now testing the 50% line of the channel. And I think personally, if we can come through this level, we'll be heading down to 21,600, and I think that's where we'll really be tested. It's also the bottom of the channel. I think it depends how the channel then holds up. I think, is it worth risking on? Maybe to 5%, but we'll have to see if we collapse through. I think it's possible that we might collapse through, especially if the inflation print on the 10th, this might take another 5 or 6 days. So then if we get to a crunch point and we're around here, come the 10th, if it takes 5 or 6 more days, what are we now? The 1st will be at August 7th, August 8th, maybe, something like this. 2 or 3 days before the inflation print, people will be becoming quite cautious. As they become more cautious, there won't be too much volume coming into markets. People will be sitting on the side. We're definitely not going to get any significant momentum going into it unless more data comes out in between, but I don't think there is. Okay, that's really annoying. Days this week. This week, anything PCE? Nope. No. Let's check this month. I just want this month. Next week, next month. Is it going to give it to me? It's not going to give it to me. Next week, there we go. Next week, optimism index, this could be important. No, we don't have anything until we get it. So that's interesting. So we're not going to have anything come out in between. So we're going to have to see how it goes. But if we're down here, August 7th, August 8th, we're not going to get any more momentum for the following days because people will be apprehensive about the inflation print coming out on the 10th, only a few days later. If that comes in higher than expected, for instance, here it's at 9.1, 9.2, what is it? 9.2. That's forecast. Consensus is 8.9. This is our moves higher, imagine if we come in at like a 9.4, 9.5. Then all of a sudden we see things like inflation rate month on month we thought was coming down, spiking again, another 1% increase, 1.3, 1.5% increase. The market will most likely sell off. Can Bitcoin then hold its flag? Who knows? It'd be tricky to see it hold its flag, but you know that's what I'm waiting on in this next week or so. I do personally have a short open on ETH. To be honest, I lost money in shorting this on the way down, having got stopped out quite a few times. Well, I got stopped out twice, but I filled a position higher. I've played this badly, most definitely, and I don't know why I'm very open with my bad trades and stuff. I just think it's very important. I think you guys know overall, you know, since January we were calling that there would be this liquidity crisis because of increasing interest rates, QT beginning, there was going to be a suck out of liquidity from the markets, and no one else was really covering that. So I'd like to think me saying that and telling us to cash out on 6th of January or whatever it was of everything was a good move and has brought me enough goodwill between everyone. But who knows? ETH at this moment in time, I think. So on the daily, we did get one. No, we invalidated the last bear div. Overall, we were looking like it was going to be a bear flag, but I'm not fully confident in this here. I want to see this test the trend probably tomorrow. Gets like a 1560, something like that would be fantastic. We're going to test this liquidity in and around here. So I think if we can get past 1600, that will allow us to go down a little bit more. And then it's about seeing if we can hold this uptrend line on the short term, and we'll possibly play the yellow box in between. But, you know, let's see. We might play the yellow box for a bounce play if we can hold up between now and August 10th. If on August 10th the inflation print comes under, say it comes in at like an 8.5, 8.4, that would be very good, and that might be the case where we market buy something in here if we've come down this low. But are we going to come down this low? I'm not sure. We'll have to see. FTT has done quite well. Where are we on this? Ooh, that's tight. I think it is a bear div. Yeah. So we have a higher high in price from here to here, and a lower high, i.e. a bear div. We've held this local uptrend line. Let's see if we come down and retest. At this moment in time, we found some liquidity in these wicks here. We found it there, and also we've got this area here as support. As you can see, it was support until it was broken. So the line is probably somewhere like this. Somewhere like that. So it acted as support a number of times, and then it became resistance. 1, 2, 3, 4. Battled with it, finally got above. Now it's hopefully going to hold a support and then go higher. But we have to see. Ideally, I don't think it's worth taking any big positions between now and the inflation print. If the great chart setups approach us, we can go for it. But I think a lot of them now are testing against big horizontal and support levels, i.e. if we look at Solana, which is a fantastic example, this $42 level, it's really seeming to struggle with. I can probably even adjust this now. Something like that is doable. You're probably there. Sorry, I'm not very good when I'm concentrating. But there. So let's see how this holds up. But for now, you know, this is really proven to be here. Here we did okay, but came back below, battled with it, came back below, up above, but we can't seem to get any meaningful momentum as price tries to go higher and test this liquidity area of all these wicks in here at the $48 region. So for that reason, I don't want to be too confident, because what's my max upside? 42 to probably 47 by the time you get out. And then what's your downside? We come back down and test a minimum of 37, possibly even down to this area, and that's being safe at 34. So the upside to downside, it just really isn't there for me, especially with the amount of unknowns in terms of the macro data that's going to be coming out over the next week or two. So for me, it's just not worth playing. BNB finally having come down a little bit after struggling with, again, the main horizontal resistance, having access support back over here before it finally came below, couldn't claim above, capitulated. So we've built a nice big uptrend channel, no bear div, that's okay. All in all, I want to see how this bottom trend line holds. Something like, no, I probably wouldn't, because it'd probably be weak anyway. No, I wouldn't. I would still test this area here and see how it's going to go. Let me extend. Yeah, I think something like that. So yeah, I think we've lost the 50% line. We're battling with the 50% line. We've also got the horizontal resistance above us at 292. For me now, the upside just isn't that much. When you're going to run into liquidity issues, anything above 290, for instance, 290 to 300, you're going to run into liquidity issues. And I think from here down to at least here, 266, what's your difference there? 13, what's your upside? 13, is that really worth playing with the unknowns on the macro data that will be coming out in the next week or so? It's literally a 50-50 either way. So again, just not worth playing. It's also an exchange coin. It's a Binance coin. So with Binance along with FTX, FTX, they're not worth playing because sometimes they can have the liquidity stops. Things like this. You're only going to get these on Binance or FTX, but not FTX, not so much. Binance, you're going to get this kind of liquidity run. But yeah, overall, not interested in this one. Matic, I'm potentially interested in. So if Matic can get below this 88 cents level, I know you said $88, that would have been impressive if it was at $88. If it can get below 88 cents level, and it needs to come below and try and hit above, can't really get there. Similar to what BNB did here, you want to see something like this. Let me circle this for you. It looks nice. Where are we? Something like this. There we go, that worked quite nicely. If we can get something like this where you keep getting these candles that reject above, we can't get the liquidity above, and we can, let me just delete that now, and we can get that on Matic, it's very possible that we may do a short down to this level. But I want to see it come down, try and get above, and then it give me the confidence that it's losing its momentum and down it comes. That is a play I'm very open to in the next couple of days in preparation for the apprehension that might come out August 6th, 7th, 8th, 9th, a few days before the Fed meeting. But let's see what we get. But I've got my eye on this one. I want to see it break this 89 cent level first. 88. Polkadot, not interested. We can see here we had this horizontal line here. Wick, loads of wicks there. Finally came below and collapsed. Had a one test up, couldn't get above. Couldn't really get above, and is finally battling with the area here. So we're probably looking at this kind of area there. As you can see, it holds the support for a long time before it collapses underneath, tests above, gets reasonably close, fills these wicks here, can't get anything. And now here you're seeing the same sort of story, but you have the support area of these wicks and these candles there. So for that reason, I don't really want to play it, especially with the MA, RSI based MA underneath. I don't think there's much opportunity there. However, Chainlink there might be. So this is our last coin. Chainlink, I think there's a horizontal support / resistance probably at these wicks. There to there. So you're probably operating somewhere in there and somewhere in there. So somewhere in between here. It depends if we hold this level and can get back above. If Bitcoin then looks as if it's going to be turning around, some of the data beforehand that comes out isn't too bad, i.e. jobs data that we have coming out isn't too bad, then this might be worth a long. So the ones I have my eye on, depending on the macro setup, depending on what data is coming out, is Matic for a short, Link for a long. But we don't smash through loads of trades in the group, guys. We're quite conservative. We care about the teaching of the markets and how to position yourself to best to earn in a bull market without taking significant downside risk and trading on mass and mad leverage. So, that's sort of what we go for. But we do have leverage trades in the group. They're just not often at all. And I do put them in day trades sometimes, and I really do not encourage them. But they can be some good ones as well. But, we'll just have to see. But overall, I think that's it. It's done. I'm supposed to be doing these in half an hour. As per usual, we've run over. Apologies. It's very typical of me. Again, if there's any questions, please let me know in the chats. I really hope that this helped you guys a lot. And, if you want to ask me about personal losses I've taken, and there's a couple people I have shared my P&Ls with, just of an account that I'm sort of doing like portfolio management of, and that is profitable. So in the long run, you are profitable as long as you stick by the potential risks and rewards. But I like sharing the losses with you guys so that most strategies you're going to be taking many losses. It's about not even limiting those losses. It's just about making sure if you're losing 60% of the time and you're winning 40% of the time, but in your system you only lose 20% on your trades and you gain 100% on your wins, that's a profitable system overall. It's about developing the trading and then understanding for yourself what works for you and trying to build a strategy over time, constantly tracking your trades, tracking your figures, and go from there. But that's the way to, I think, in my opinion, and yeah, it's just a humble opinion, but I think that's the way to go. Anyway, that's it, done for this evening. Any questions, fire over into the chat and I'll get back to you tonight. Cheers everyone, I hope you have a nice evening. See you all tomorrow. Bye bye.